Hello, good afternoon. You've tuned into your stocks on CNBC-TV18. I'm Vinny Motiwala in the Mumbai studio. Today's day, Nifty as of now is trading almost near the day's lowest point. 23,700 is what is just managing to grip onto. At one point of time, it did fall below the 23,700 mark as well. Mid and small cap, that's the clear underperformer coming in today. A sharp decline that we've seen in the Nifty mid and small cap. Nifty mid cap down almost 2%, you could say. Small cap also down 1.4% in trade. Nifty Bank too is dragging, and we're seeing Nifty Bank down more than 1% as well. As of now, when you're looking at it, most of the sectors are trading in the red. So keeping an eye out on the market, especially the next 1.5 hours where it's going to be moving, where the Nifty will be closing, is a key to watch out for. As of now, 23,700 is what is just managing to hold on to. But this is a show where we will solve all your stock-related queries. So let's get started with there. And we have our experts for today who are joining in with us. We're Parthiv Shah, Director at Tracom Stock Brokers, and Vaishali Parekh, Vice President at Technical Research, Prabhudas Lilladher, joining in with us this afternoon. Good afternoon, Parthiv, as well as Vaishali. Thank you so much, as always, for joining in with us. Vaishali, Friday really didn't turn out to be a Friday. It's the opposite of that. What are we expecting this Friday? Last Friday, we did see some bit of that recovery come back in the second half of the day. Today, it seems a very different story. Markets, what are we watching out for?
Very good afternoon, everyone. Yes, so market has been going through a little bit of a turmoil, and we have seen good, decent correction. So technically speaking, we are once again at a crucial support level of 23,750. So hopefully we should get a little bit of a bounce, but conviction is only about 24,100 that the trend is improving. Till then, we call it a bounce back. But in case if these levels do not hold, then I think there is a further slide towards 23,200 to 22,500. So very hard to tell whether we are bottoming out or still downside is still likely.
Okay, surely keeping an eye on those levels over there. But on that note, let's get started with all the viewer stock-related queries. And the first query we have is on Adani Green. We have Vijay Krishnan, who's writing to us from Bangalore, holding 2,000 shares of Adani Green at a price of 1,700 rupees per share. He says that he's a short-term investor, wants to know whether to hold or sell the stock. Vaishali, since it's short-term, I want to come to you first. What should the viewer now be doing? They're making a loss on this one, obviously, currently. Short-term targets that they should keep an eye out on?
I would say 1040, because purely on technical short-term levels, I think 1040 should be the stop loss. And I think look for a target of 1240. But for that, you need to wait it out because the stock needs to sustain above 1160 levels. So if that occurs, then you are ready for a target of 1250 or so. So yes, the risk-reward ratio for now, it looks pretty favorable. The indicators are also in an oversold. So I guess one can take a trade. Risk-reward ratio is quite favorable.
Okay, risk-reward seems favorable, but for the levels that Vaishali mentioned, you may have to hold on for that. Let's move on. And Parthiv, on the fundamentals, what is your advice coming into the viewers? Would you advise them, maybe instead of going for that short-term bet, wait out for the long term and then continue to hold? Or would you advise them to just book out their losses from this one?
Our sense is that Adani Green is a more of a long-term stock, because I think if you look at the company's potential in terms of the execution track record, they're currently at 11.4 gigawatts of green renewable power manufacturing power generation capacity. And going ahead, I think by 2030, they have a huge target of achieving almost 50 gigawatts. Now, I know it looks very aspirational in terms of the staunch target that they've kept for themselves, but even if they're able to achieve somewhere around 35 to 40 gigawatts of renewable power generation capacity, I think that would be huge, and one of the largest one of the largest in the world in terms of a single company owning such assets. So, I mean, it's a long-term direction view in Adani Green. And short to medium term, yes, the stock could stay on the sideways, but only if the investor has a 5-year horizon, then probably I think very decent returns can be made from it.
Okay, it's a long-term story is the word coming in from Parthiv. Short-term, then maybe, you'll have to watch out for certain levels over there. But let's move on to the next query we have, and this one is on L&T. We have Karan Mehra, who's writing to us from Mumbai, holding 3,000 shares of L&T at a price of 1,700 rupees per share. obviously making good profits in this because the stock has almost doubled from the level that the viewer had purchased it at. Now wants to know whether he should continue to hold or book out his profits. What is the word on this one, Parthiv? On the long-term story, how is it looking?
We are very upbeat on L&T. It's one of the finest conglomerates to play the infra and capital themes in the country. It's one of the only companies in the listed space which can brag of a total order book of upwards of 5 lakh crore. And that has also been growing at a very rapid pace, especially the infra segment. The order book has grown by almost 77% year on year. So it's been the case with the energy projects, the precision engineering, and they've also kind of carved out a new vertical bit on two major sectors going ahead. One is semiconductors, and second is to focus on the transmission and distribution grid for the renewables. So L&T, I think, is one of the finest stocks to own. Luckily, the stock has corrected from upward levels of 4,000 to current levels of 3,600. I think these are very good entry points, and the investor should hold on to such stocks.
Okay, hold on to the stock. That's the word coming in on L&T from Parthiv. Vaishali, on the technicals, what is the story for L&T? Because this year doesn't seem like it's performed a lot, right, in terms of a move that one was watching out for. Clearly, I'm sure the viewer is someone who's bought this a couple of years back. That 1,700 mark is what they bought it at. So now, would you suggest hold or sell?
So chartically, I think there's nothing wrong. It is just seen the regular retracement right now in a corrective market. And if I were to see the long-term chart, even on a daily chart, it is currently at a trend line support. So it's a rising stock, and still it is in the process of higher top, higher bottom. So technically, I would say 3,500, 3,600 is a very good entry level. So I would say one can add more, because these are the stocks which long-term, when you see the targets and projections, I think it will give very good returns. So this is surely not to be taken as a trading bet, but one can start adding more at the support levels of 3,550 to 3,600 levels.
Okay, not a trading bet, but can add at those levels that Vaishali just mentioned. So keep an eye out on this one. L&T, a good story for the long term. Moving on, we have Devanshu Mohata, who's writing to us from New Delhi. 7,000 shares of Yes Bank at a price of 37 rupees per share average price. He's a long-term investor, wants to know whether to hold or book out his losses. And maybe, if they book out their losses, can they look at something else? What would you be suggesting on this one, Parthiv?
Yes Bank has been an interesting bet, I think, because it's always in the chatter in terms of some sort of takeover. Recently, there was some chatter regarding some Japanese banks wanting to buy and stake here, and the stock did extremely well on that chatter. But I think that those things don't tend to materialize because I think a lot of regulations in place. But nonetheless, I think if I talk of the core business, the bank has done a fantastic job in terms of its turnaround. And going ahead, I think they are building the book pretty well. The asset cleanup has also taken place. But again, we should not forget the fact that a lot of equity dilution has already taken place. So it will be very difficult to see Yes Bank, I think, just go back to the high levels of 30 in a very short period of time. In the banking space, I think we are more upbeat on the regional banking plays where the valuation is a lot more attractive than Yes Bank. Something like a Karnataka bank looks a lot attractive, and I think the book is also shaping well. And looking at the current valuation, I think it can give a tremendous upside in the next 2 to 3 years.
Okay, and Vaishali, your view on Yes Bank?
There's actually nothing really happening. It's showing slight improvement, but conviction comes only about 23 levels. If that happens, then one can expect targets of 28 and 30 to start with. But I would still say that if time is not the problem, then continue holding. But for conviction stocks, I would still focus more on ICICI, HDFC Bank, Kotak Bank. These are the stocks which will really give good returns from here on. And in the public sector, I would agree with Karthik for Karnataka Bank, in fact, even Indian Bank. All these banks are quite promising on the chart. But Yes Bank is shown just a range-bound move, nothing much happening. Only view gets further conviction only about 22, 23.
Okay, sure. Let's move on to the next query. This one is on Z Entertainment. With KS Rao, who's writing to us from Guntur, who's saying that he's holding 50 shares of Z Entertainment at a price of 170 rupees per share. Viewer is currently making a loss on this one. Hold or sell? What would your advice be for the viewer, Parthiv, on this one?
Very frankly speaking, despite being a fantastic brand and a fantastic franchisee, I think this company has lost a lot of shareholder wealth. And I think one trigger that was working in favor of Z shareholders was the merger with Sony, but that also is not, I think, happening. Very few triggers left, and I think Z might have to kind of raise funds, and not sure how lenient the banks will be now. But I think it's better to avoid this counter. Has destroyed a lot of wealth, and there are no immediate triggers for the shareholder to kind of recoup his losses.
Okay, and Vaishali, on the charts and technicals, what is Z Entertainment indicating? YTD, the stock is down 55%. What should the viewer now do?
I would say actually exit and get into a better stock. But if he has to, then I think technically it is just filling up the gap that we had witnessed some time back. So 120 should be kept as a stop loss. And well, for the near term, the resistance lies at 135, 138. If it manages to sustain above that, then we'll look for a target of 160. So that's how I would say form your strategies.
Okay. That's the view coming in from Vaishali on Z Entertainment. But on that note, we're going to slip into a very short break, viewers. Don't go anywhere, because after the break, we'll continue with your stock-related queries. So stay tuned in. Welcome back to Your Stocks on CNBC-TV18. Let's move on and keep it going with all your stock-related queries with our experts for today, Parthiv Shah as well as Vaishali Parekh, who are still with us to solve those doubts. Let's move on to the next query, and we have Anala Srinivasa, who's writing to us from Telangana. Now, he's holding 6,600 shares of Tata Steel at a price of 130 rupees per share. He wants to know whether he should continue to hold or look to sell the stock, currently making some bit of a profit on this one. What's your advice on this one? Vaishali, let's go to you first.
Sorry, come again. Could you just tell me the stock?
It is on Tata Steel, and the buy price of the viewer is 130 rupees per share.
So I think, according to me, I think we have seen a decent correction. And Tata Steel also, what we witnessed was from the recent high of around 170 levels. We have seen a very good retracement coming in. And it still is holding well as compared to the other metal counters. It's still in the process. It's very close to the previous low. So I would say if long term is the view, then I think one should start accumulating. A prominent support lies at around 132 to 135 levels. So I would say start accumulating. Exact bottom fishing of the index or the stock will not be really possible, but we are at a very decent. Indicators are showing oversold zones. Even the long-term picture looks pretty decent. So I think one should start accumulating if the long-term is the horizon.
Okay, and Parthiv, your view on Tata Steel?
The valuation at which the viewer has entered, I think, are pretty comfortable, despite the fact that the steel market has been very sluggish, not because of the domestic demand, but more because of the dumping that is taking place by China all over the world. But Tata Steel is a very efficient, a very low-cost producer, especially domestically. And going ahead, I think there is a good visibility of volume uptake right until 2030, where they're almost doubling their capacities. And Kalinganagar 5 million ton blast furnace is working, so that should also ramp up over the next year. So I think we are upbeat on prospects of Tata Steel, and hopefully if there are any sort of anti-dumping duty measures by the Indian government to safeguard the Indian steel industry, I think Tata Steel would be a very big beneficiary of it.
Okay, the next query, this is also coming in from the Tata Group stocks, and we have Sri Harana, who's writing to us from Chennai on Tata Tech, holding 13,100 shares at a price of 1,175 rupees per share, and now is at a loss, is what they're making, almost 20% from the buy price. Wants to know the target for this one on the long term. Parthiv, what's your view on Tata Tech?
Stock is corrected massively. One, because the valuations are very elevated, and two, because I think the recent quarters haven't matched up to the hype in terms of the re-rating that it took place, especially after its IPO. And probably I think there were a couple of client-related issues as well where the orders didn't pass through. But I think this is a fantastic company. It's a very well-run company, and they're catering mainly to the automotive space and also in the aerospace segment. They have very good clientele, and going ahead, I think if the client budgets are ramped up, I think Tata Tech will be a key beneficiary. We are not expecting very good next couple of quarters. So the stock, because it's already price corrected, I think it could time correct here. But I think it's a good long-term 3-5 year stock. It's a portfolio stock, and it should give very good returns in the long haul.
Okay, a good story for the long term. But Vaishali, on the technicals also, any indication that you could pick up?
So technically, I think, well, it's still on a downward. There is no sign of improvement, though being in the oversold zone. I would only say that, yes, if fundamental view supports, one can accumulate, but purely on technical term, it may gather some meaning only about 970, 980 levels, because once it goes above that, it comes above a cluster of moving averages, and then it's in the process of showing higher target potential. But for now, there is no view for a buy. It is the trajectory is still weak. So, well, one can say that there could be a limited downside. 830, 850 should be the support level to look for.
Okay, keep an eye on those levels over there for Tata Tech. Let's move on to the next one, and this is from Ramakrishnan, who's writing to us from Chennai. He's holding 10 shares of Asian Paints at an average price of 3,122 rupees per share. Long-term investor and wants to know whether to buy more or sell. What is the view on this one? Parthiv, should the viewer look to add some more of the stock? Currently, they're making some bit of a loss. So what's your view?
I think the stock has massively corrected from its high levels of around 3,200, 3,300, and primary reason being, I think, elevated valuations, and last 2-3 quarters haven't come really well. Last quarter, I think the management did cite the fact that due to the delayed monsoon and subdued consumer sentiment, I think the volume was pretty tepid. But even in quarter 3, I think the management haven't given a lot of positivity in terms of the guidance. Maybe I think it also seems that the competition from Birla Opus is also sweeping through. And the company has expanded its capacities, and they still have very high number of distribution points. So it will take a couple of quarters for the company to come back and I think show some decent performance in terms of numbers, until which I doubt the stock could have any trigger. No doubt we are very upbeat on the paint industry for the long term, and Asian Paints, after this massive correction, I think is now looking reasonably well placed in terms of the valuation. I believe that if the investor has an appetite to hold for the next 2 to 3 years, then the stock should come back to the levels he's invested. So no harm doing a little bit of cost average if the stock further corrects 5% from you.
Okay, no harm if the stock corrects further 5% from here, then you could look to average. On the technicals, Vaishali, Asian Paints, like even Parthiv was highlighting, right? The stock has not done anything exciting, especially in this year. Nothing has come in from the Asian Paints side. Plus, the consumption story doesn't seem too strong right now. Technically, Asian Paints, what would your suggestion be? Add more right now, wait out for some time, or just book out your losses?
I would say that, yeah, still wait, because market is likely to witness further more correction if the trend, what we are looking at, it is showing some weakness. So I would say, well, highly oversold, because we have seen this corrective move beginning right from 3350 to now around 2200 levels. So I would say hard to tell that, well, to how much downside is still expected, but 2000, 2200 is a prominent support band. So for now, I would say just take it as a trading bet. Buy it at these levels with 2200 and 2000 support levels, and see a resistance at 2500. So only if once the stock moves about 2500, you can expect a further rise coming to 27, 28. So I would say take it as a trading strategy and go step by step.
Okay, that is the view coming in on Asian Paints from Vaishali. But Vaishali as well as Parthiv, thank you so much for joining in with us today. That was the last query from our viewers, and hope you'll have a great weekend. And viewers, with that, we're absolutely out of time on this edition of Your Stocks on CNBC TV18. Leaving with the markets at 23,700, we saw the Nifty fall just below that during the show as well. Now I'm also holding on to 23,700 levels, 344 points off the day's highest point. Keep an eye out on the markets. We have Closing Bell, who will take the action forward in terms of where the market is headed, and prepare you for the next 1 hour.